Okay, traders, what I'd like to do in this video is I'd like to teach you about fair value gaps. Now, if you're new to fair value gaps, stick around because this is going to be a great primer for you. And what's really nice is that we've built an indicator called the Fair Value Gaps zoning software, and it's actually free inside of the Tickblaze community scripts section. Now, like the other scripts, this can be downloaded inside the community as a zip file, which you can import it into the platform, or you could literally take the source code if you're a developer and extend upon it as you see fit. Now, before we go into the actual indicator, I think it's really important that I explain what fair value gaps are, because they're an entry strategy. They're an entry tool for you to be able to identify where to buy or sell the market. But I think what happens is they get often confused with different levels of analysis, and before you could use to trade these areas, I think it's important that you understand it. So what I'm going to do is I'm going to grab a cursor here and we're going to talk about these two examples here. Now, I've drawn some fake price candles here just to basically display this. And as you can see, we've got a price bar going down, another price bar going down, and another price bar going down. But what a fair value gap is a gap in price between it's a three candle pattern essentially. And what happens is that because the market has so much strength in one direction or the other, there's what we call unfilled auctions or unfilled orders. And normally what that means is that there's going to be a gap between the high and the low of the first candle and the last candle. And this creates what we call an imbalance, right? This is an imbalance in orders. Now, if we're looking at a price chart, right, let's say this is a price chart here and here, right? The y-axis is always price and the x-axis is time. Well, if we're thinking about it in terms of price, the market had to move so much down with force that all of the orders here or this price level didn't fill any other auction. We didn't come back up in here to execute the orders. And so this often creates good trading opportunities, right? So let's just recap. It's the space here from this low to this high. And this creates what we call a fair value gap. I mean, some people call them gaps, some people call them imbalances, some people call them whatever you want, market traps. But what they are is they're an opportunity for you to be able to draw a zone here. Okay, and this zone can create an opportunity to sell the market. Now, the same is true on the long side of the market. If you've got three up candles, you got a candle here, you got a candle here. They don't have to be three up candles. They could be an up candle, a down candle, and then an up candle. It doesn't really matter the color of the bars. All that matters is that it's a 3-bar pattern and that there's a space between the third bar's low, for this example, and the first bar's high, which creates the fair value gap. In this situation, it's the first bar's low and the third bar's high. In this situation, it's the first bar's high and the third bar's low. And once again, this creates an opportunity for buying when the market gets back down here. Now, normally what's going to happen is the market's going to trade lower, and when you retest back up into this, it's going to create an opportunity to sell the market. When the market comes back down to this, it's going to create an opportunity to buy the market. Now, this is just the entry aspect of these types of strategies. There's a whole other aspect of like where you should be taking these trades, and do you want to do them on a smaller time frame or a larger time frame, or do you want to use multi-time frame? This can be used in a similar context to supply and demand trading, right? These create levels of supply or demand in the market. And a lot of traders will use them with like SMC concept, or, you know, when you look smart money concepts, a lot of traders will use the jargon around SMC. And what we've seen is that it really just boils down to looking at multi-time frame analysis. If you're trading sell levels, you want to be trading it in the context of the bigger picture down bias. If you're trading buy levels, you want to be trading it in the context of bigger picture bullish bias and so forth. Now, the concept here of these levels is that they happen all over the place. And sometimes they'll be really small, sometimes they'll be really big. It just depends on the price action. So what I'm going to do is I'm going to go over here for a second. Okay, I'll just keep that diagram here. And we can actually see them. Like I can go in and I can spot them here. You can see I can just draw it. You see this candle here, there was the low and then the high. But then take a look at this bar. This bar came back up into that area and filled it. Okay, let's go back and see if we can spot another example. Right, here's another example of it happening here. Right, you can see there was the candle low, and then there was the candle high, and then the market came back up into that and it reacted out of it, right? You can also see it on the bullish side here. You can see on the long side, like take a look over here. There was an opportunity here where the market came up, there was the low, and there was the high. The market came right back in to fill those orders, and bingo, okay? So it's really hard for your mind to keep track of all this, right? Like it's really not ideal, which is why we build indicators to be able to help us with this analysis. Now, there's 3 types of levels. We call them fresh areas of interest or fresh fair value gaps, tested or broken. Fresh are brand new levels. Fresh means that the market has never traded into these. Okay, so like if we're looking at it from this perspective, these are opportunities that are still presented as tradable areas. Now that doesn't mean they're going to hold. That doesn't mean they're not going to be perfect. You could very well trade back up here 1 tick and it could give you an amazing trade, or it could just trade right through it. Right? Because it all has to do with, are you on the right side of the market? Are you on the right side of the higher time frame? Are you on the right side of the big picture bias, etc.? And there's a whole strategy around this, and we're going to teach this in live. We're going to do some AMAs, we're going to do some live streams. We're going to really dive into how to use fair value gaps and supply and demand and market structure and some upcoming training. But for now, we'll just give you this indicator. You can download it for free, and then you can start to look at how price reacts into those areas. Now, the next thing is tested. So tested means the market has gone into these areas, tested them, traded out of them. If you take a look here, take a look at how small this little gap was. Like literally, you can see this. It's not hard to see. The market came right into it, tested it, filled it all the way to the top, and then it dropped. Okay, same thing here. Take a look at this one. The market created that gap, came up into it, filled it, not all the way, just traded into it and then dropped. Same thing here. This one created it, touched it to the tick, right? You can go and see all of the time it tested it. All of these were already filled. You're not going to see them unless you have, man, you got one down here and you can see there's some fresh levels. If you zoom out all the way, it's really interesting to see that the software can identify all the fresh levels and all of the tested levels, okay? But then when you start to really dive into the analysis, okay, you start to look at things, you can really go and turn on broken. And now you can see where all of the prior levels used to be. And then that way you can identify that not all fair value gaps hold, right? Sometimes the market will blow right through them. And another thing you want to be mindful of is that time frames matter, right? The smaller the time frame, the less strength those gaps are going to have, right? And the bigger the time frame, the bigger they have. So if I go up here to, let's say, I don't know, let's go to a 60-minute time frame. Let's see how it looks. We might not have any fresh gaps. Let's take a look. Yeah, we got some fresh ones here. Look at, you can take a look here. These are all just my drawings, but you can take a look at some of these levels, and you can see that as the market gets stronger, many traders will trade this on bigger time frames. They're going to go in like on the 4-hour chart. You'll see this often in Forex heavily. Futures, because they're not really as technical as Forex, but you can see the market when they trade into these levels. They're quite powerful. Like let's just go down here. You can take a look at, there was this level here, right? And it reacted, and then wow, what a trade. Same thing here. This came in and then react. But a lot of times what we'll do and what we'll teach traders is that when you get to these areas, let's go inside the data and look at the entry patterns, right? You don't necessarily just need to put a blind order at every single buy or sell level and hope that the market's going to hold, right? The goal would be that if I get up to these locations, right? This is what we call an area of interest, It doesn't mean you just got to put a sell limit order and hope that it works, right? You can go into the data. Like I'll give you an example. If I come into this level right here, here's a great example of the market came into a 4-hour fair value gap. It overshot the level, but then it went all the way up here. That's a huge move. It's a 4-hour chart, right? So if I draw a little circle on the chart here, let's just draw a little box for a second. Let's grab a rectangle here. Let's just draw that right there. And I go inside the data. let's say like a 5-minute chart, yeah? Let's go find it. Let's go find that level. There it is up here. You can actually see, this is what we call multi-time frame zoning, which is part of like all of our deep dive strategy classes we're going to have after. And you can actually see that inside of this level that we had on the higher time frame, there was actually a smaller time frame fair value gap right here that came from over here. And then look at how the market responded to this lower one, right? And what we often see is that we will wait for the market to give a change of character or give a market structure. Like, look, the market came into this level, it changed character here, so it broke the structure, and it created a new fair value gap here. And this is where you get the really, really big trades. Now, this is some SMC concept here. This is some multi-time frame structure concepts here. We're not going to go into this today because that's several hour conversations, and we're going to train you on that differently. But this is a great example of going into that data, and this was zone within a zone. And I strongly, strongly believe that there's some really powerful trade setups here once you understand how to do that, once you go inside the data. And the whole point of this video and the whole point of this is to get you to download the software for free. You can have it, you can play with it, you can load it on your chart, and then you can ultimately go inside the data every time you want to see things. So let's take another example here. This one was up here. Let's go back and find this one. Let's go just draw another example here. I'm going to draw a circle around that. Okay, and we're going to just move it over here. Okay, right, that. So let's go into a smaller time frame. Okay, 5 minute. And we'll go back and we'll see if there's anything inside that data point that would allow us to be able to trade that. Let's take a look. Here it is. Look at that. This is exactly what I'm talking about, right? You can see it inside of this bigger zone here. This was a bigger zone, this circle, okay? But if I just go down and take a look inside the data, you can see what it's doing. It's going in and it's identifying smaller time frame imbalances in the data right here. And ultimately that was from these imbalances over here. And these all create a much larger imbalance on a higher time frame. Now there's strategy around this, there's step-by-step procedures, there's scanning, there's trade entries, but there's really, really good entries when you identify the first higher close in the market. Like when you really see that prices are making higher highs and higher closes, that's when you know that when you come in, you don't have to catch a falling knife and then get stopped out. You can wait for the market to rotate. This was the first candle close, okay? The first higher close. And then normally what I will tell traders to do is identify that demand zone right here inside that higher close. There's a huge opportunity to trade that right there, and that would be your entry. That's a huge trade. Just very, very tight risk, very, very big reward, and it's all about multi-time frame zoning. So I'm a big believer of multi-time frame zoning just because I've been around for about 15 years looking at charts and seeing how the market moves inside of these areas. And I truly believe that we'll do a strategy class on this. We'll teach you how to do this. And I'm going to show you how to find these opportunities. And you're gonna be in a really, really good place, right? It really just depends on the nature of your time frames and how often you want to look at things. You could do this on futures, forex, crypto, sometimes stocks, just depending on if they gap a lot. But for now, I just want you to understand this concept. Let's turn these off for a second. Fair value gaps are going to happen with random price patterns. They're going to create sell imbalances or buy imbalances. They're created on a 3-bar pattern, and our software identifies them for you so you don't have to do the hard work. Okay. So if you like this video, what we're going to do is we're going to do a lot more training on this as a primer. Go down below this video, give a like, a thumbs up, a comment. You can ultimately click the link in the video and it'll bring you into the actual members area for the actual community. You can download the software and pick the market that you like to trade on. If it's futures, great. If it's forex, great. Remember, I always encourage taking a zone from a higher time frame and then dialing into the smaller time frames because you're going to get better trades and it's going to be better risk management. But for now, this is going to be a great place for you to start. If you're interested in having more training on these types of strategies, just leave some comments in the chat and we'll get back to you and we'll set those up. Take care, traders, and hopefully you enjoyed Fair Value Gaps.